Hello, welcome back to Exit Planning Part 3, part of your MB 2204 Integrated Business Experience 2. Yeah. Again, my name is Subiakto. I'm your facilitator. I'm the full-time lecturer from School of Business and Management, ITB. Yeah. All right. Uh, on this part 3, I provide you with the examples. So you can see it, you can learn it, you can use it also for your upcoming report. Yeah. For this presentation, I'm going to take the financial section of the report that has been prepared by Awkward IBE 2015. They were doing a great job. They provide a comprehensive and a complete report, the financial report. But for your reference, I will be posting also a complete report of Tara Juice IBE 2019. Yeah. The report will be posted on your Google Classroom for your reference. Yeah, they were doing a good job also providing a comprehensive report. Okay, for the first one, the income statement of Awkward for the period ended April 2015. That is where that is when the IBE during that time ended. Yeah, so I believe your company also will be ended on April this year. I let you watch it, see it for a couple seconds. All right, let's see it. Yeah. So this Awkward company started their business on November. So November and December they were still on the IBE 1 actually, but they already ready, prepare and start selling. But that's what we call a pre-sales probably, yeah. Their actual IBE 2, their selling activity takes place January, February, March and April. See, they provide month by month performance, the sales revenue. Even they provide sales discount on the last 2 months of March and April. The total sales they are making is 190 million. Yeah, amazing. During 1, 2, 3, 4, 5 months, they are able to produce 190 million. Amazing. With the employee or with the members, around 20 also. Yeah. So the income statement is pretty standard. Yeah. They got sales income, total sales income, even they got also interest income. From the money, from the cash they have in hand, they put it on the short-term deposit maybe, or put it on the saving account. Then they got the interest income. Not much, but it is good for the learning also. So they got total income, and then they got the cost of goods sold. Then after that, revenue minus total cost of goods sold, they provide a gross report, and then they record also operating expenses in terms of marketing expense and operational expenses. They got total operating expenses, so gross profit minus total operating expenses becoming operating profit. And then after operating profit, they got also other expenses and probably other income if you have. Yeah. Then they provide the tax. They are not pretending they got interest income tax. From the interest, they need to pay tax. 20%, I believe so. Yeah. And then total other expenses, then everything add up together. The bottom line, this is the net profit they reporting. And then on the last column, this is also good. They provide a cumulative numbers. Yeah, so the total says 190. The gross profit is 148. They record the COGS 39 something million. And then the bottom line, they are able to create almost 60 million rupiah, yeah, during this IBE 2. All right, so the next financial report, as you may aware, is balance sheet. I'll let you see it, learn it for a couple seconds. Yeah. Okay, this is also pretty standard. Yeah, the balance sheet should be balanced between asset and liabilities plus equity, right? So they record asset. They even for the cash they reported cash in hand, cash in bank, cash even cash collateral in time deposit. Beautiful. Yeah, very complete. Yeah. And then they got total cash, down payment to vendor. So anything they put on vendor, they pay on vendor, they have not received any goods from vendor, they record it as asset. Very good. Inventories, prepaid expense, office supplies, and account receivable. Since most of the transaction is cash transaction, so you can see from month by month there were no account receivable except for the last March, yeah, for the last March. All right. So they got total asset. They got also total liabilities because they are also taking short-term debt. Yeah. And then the bank loans also, they are taking a bank loans. Yeah. Then they record the capital. This is the equity they put it to start the company. And then donated capital, what is it? So under this concept, donated capital, they receive the salary. Each member of the company receive a salary, but that's only for a matter of the recording for the income statement. But after they receive the salary, they all donated those salary in this donated capital. Right? So I think you should do the same report here. The next report will be your statement of cash flow. So there will be a three financial statement: the income statement, the balance sheet, and then the statement of cash flow. Yeah. This one also pretty standard. You need to show the cash flow coming from three activities: operating activities, investing activities, and also financing activities. So add up together, it will be net change in cash, the cash at the beginning period, and then cash at the end of the period. Sorry. Yeah. Okay, so that's the financial statement. Then starting with the financial performance analysis, you need to do also the ratio analysis. Yeah, the financial ratios analysis. As I mentioned before on part 2, then there are 5 groups of financial ratios, but for this IBE you need to do only 4 groups of ratios: liquidity, leverage, profitability, and activity ratio, while the market ratio is not relevant for your company. So again, they did it month by month. Yeah, the financial ratio. Uh, yeah, you need to do the same thing. So company performance analysis, and then you need also to show the payback period. How long the investment will be paid back. Yeah, by providing here, you may read it. The initial investment, they start this company by equity of 45 something millions, and then they record the net profit. Yeah, they record the net profit month by month here. See, they produce a good sales, but also it is barely covered their expenses. Yeah. So if you see this cash flow, it starting on March, they record a positive cash flow, positive profit there. Yeah. But before they record a negative also. Yeah. So based on this one, you provide the cumulative cash flow, show it when it will be a positive one, meaning that the cumulative of your net profit can cover your initial investment. So this company wrote that the initial investment will be paid back after 3 months and 8 days. Yeah, the 3 months and 8 days, it is started calculated since January. If you take a look on this tables, actually, if you consider they start the business from December, so it should be included there. So it's probably 4 months and 8 days. Yeah. So yeah, the payback period. Okay. After that, what you need to do? Need to provide this net present value and internal rate of return analysis. Yeah. I provide you on the separate posting how to do this calculation. Yeah. So I believe most IBE companies have no fixed asset because you did not buy machineries, you did not buy a computer table, you recorded no fixed asset. So your initial investments probably only on your working capital, meaning your current asset minus current liabilities. Yeah, so this is the net present value and IRR analysis. Yeah, and then you provide the cash flows. And then use the formula on the Excel. The NPV, you provide formula, you get this one. Yeah. Be careful because this is monthly. You need also to convert your discount rate becoming a monthly discount rate. Use the assumption your discount rate is 12%. You may use other numbers as you feel necessary. Maybe right now it is a smaller number because the short-term rates now becoming 4.5%. So probably your discount rate not this much, probably less than this number. See, your net present value is positive, meaning your investment, your company is profitable, generates more income than investment, and then also IRR. Yeah, use the formula on Excel. RRR equal, and then you highlight from the period of 0 until period of 7, and then it will be giving you the return. This one is the monthly return. Clearly, it is bigger than your discount. Higher than your monthly discount rate means this investment is a good business. Okay, additional analysis is showing your break-even point. The awkward company having a three product line, the clutch, hexagon necklace, and then sand necklace. Yeah, so they are on the business of jewelry. Yeah, then the three product line, and then they got a fixed cost, they got the average selling price, they also got variable cost. Then the formula to calculate break-even point, the fixed cost divided by price minus variable cost. Yeah, so beautiful. They got the break-even point 29 for the clutch, 402 for the hexagon chili necklace, and then sun necklace 85. So, and then you should summarize, you should conclude. Yeah, they provide also the conclusion here, then provide also the lesson learned. Yeah, then they mention also they encounter a difficult situation, yeah, on the middle of IBE 2 because of the clutch production. They also almost at the risk of even not reaching your pessimistic goal. Yeah. On your case, I think you should also provide the lesson learned and then the mitigation that you need to do it because of the COVID-19, the pandemic things. Yeah, that makes your report slightly different with the previous report. All right. So now what? Okay, this is a recap and summary. You need to make a decision, yeah, on the exit plan, whether to continue or liquidate your business. So a couple things. You may continue as it is, grow the business, and then show if you need more working capital or you need more equity capital, how you gonna get it? Yeah, and then another option, sell it to the public, IPO. You are not able to do it, of course, but this is part of the learning. For the IPO, you need to do the valuation analysis, right? If you sell it to individuals, you also need to do the valuation. Yeah. If you sell it to other company, you are involving in the merger and acquisition, you need to do a valuation. Yeah. Or another option, you want to liquidate the company, meaning you are killing it. Yeah. In terms of liquidation, yeah, be aware, be careful. You need to take a look on the balance sheet. Sell all the asset. How you want to do with the inventory? Sell it right away. Yeah. Put a discount. Put anything, any effort to get rid of your inventory. Yeah. Show everything in terms of cash. Then you need to pay all the liabilities. If you borrow money, then you need to return the money. Yeah. Then the shareholder will get the remaining. That's why the shareholder have the residual claims. That's what it is called. Yeah. And then last but not least, you need to determine what to do with all the cash remaining you have after paying the liabilities. Yeah. This is only for example. You probably state that you want to use the cash for the CSR activities in the next semester, maybe. Or you probably donate part of it for the COVID-19 charity during this pandemic thing, which is a good thing also, or by other allowable option. You need to consult to your tutors. Yeah. Make sure you write this in your report. Okay, I think that's all. So By the end of this part 3, I think we have covered all the exit strategies, exit planning, the things that you need to know, and then provide you with the tools that you needed to use it for your final report. I thank you for all your attention. So good luck with the rest of the semester.